Hello, 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 hello. It's Grim Barbs again for my second YouTube video on the current state of the stock market in 2021. I've now come to the conclusion that we are not going to have a massive crash this year. I'll explain why. We are going to have a correction. If I had to guess right now, I'd probably say over 20%, 20 to 27%, 24%-ish. Something that'll trigger a bear market, that they would say bear market a lot in the news, so that it'll create a lot of fear and things like that. But that's not what I'm worried about in terms of a specific number. What I am worried about, or what I want to talk about, is the market skyrocketing the next 2 months approximately, with the VIX breaking below 20. I believe this week with the Fed. What I think will happen this week is we'll go sideways. We'll just chop whatever. And I think there's a volatility event that will happen with the Fed on Tuesday or Wednesday, most likely Wednesday, that it'll spike yields because everyone is scared to death of yields right now. It'll spike yields, and there should be, doesn't have to be, but there should be some sort of sharp volatility event that would take the VIX back above 20 or bounce off of 20 before it can go below 20. 20 is a huge psychological level in the market, and I would assume, based on the way it's looked and it's gone straight up since the bottom here, I would assume we have some sort of sharp volatility event. It shouldn't be long. It shouldn't take a week or 2 weeks. It would be basically a 1 day, 2 day event. It crashes during the Fed meeting and then it gaps up on the Thursday, something like that. I spoke about it in my first video that I was expecting something in middle December during the Fed meeting where we have some sort of sharp sell-off and then the rally afterwards. That's what happened here. It actually happened 3 days or a day after my video, and we had the very sharp sell-off overnight, except we didn't get the rally. And there was various reasons for that, but I don't really want to go into those specifics. I'll go over a couple of things of what I saw and what I see now. It is guaranteed that the VIX goes below 20 in the coming months. Right here, January 29th was a huge algorithmic trigger in the market. Something very, very specific happened that changed the markets to bullish right at the low of the day. Literally right here. Changed the algorithm to the stock market to bullish. And you can follow the technicals from there. That will show you it going bullish from there. But what I want to show is what happened in December. Basically decided that we weren't going to have a crash. That this was, I said it was an A, this was a B, and we're going to C. But it turned it from the crash to a major wave 5. I believe it would be a 5. I cannot believe that it actually could be a wave 5. This shouldn't last like 10 years. It shouldn't last like 5 years, but it could last a couple of years. I personally still think it'll happen next year, but because of that happening in December, I'll show you, this should extend longer than this year. We will not get the crash this year. We should get a correction, but not the crash. And that's all there is to it. So what happened in December was the monthly DMI, which was the right here, it crossed with the vaccine in November. It crossed for the first time since COVID in November. So what happened in December? It retested the negative trend. It retested the COVID trend. If this was going to be an A, an overextended B, and then a C, it would have had a volatility event that confirmed it in December. November crossed, you get the retest of the negative trend or the positive trend, and you find which one is the continuation wave. Now, this was probably the most stressful trading or analysis I've ever done because of how tight the movement was. It was basically the coiling between the COVID crash and the new bull move. And the moves here were so toxically bullish and bearish that I couldn't figure it out. It was really, really toxic. So what happened in December, if you look at December 1st, gapped up, the second day goes down, you get this negative trend here. It gaps up, and then you get one lower low, two lower lows, three lower lows. And this third lower low, okay, You see this, right? So it gaps up. This is the first month that the COVID negative wave should continue if it's a continuation wave. It tried once, it tried twice with double open red candles, it tried thrice. And you ended up getting a huge algorithmic trigger in the SPY, and people would look at this and be like, what is that? And you'll have every reason under the sun as to why that actually created that. And what it was the first positive monthly DMI trigger in the stock market right here. First positive one since the top of the blow off move in 2018 with the top of Bitcoin and everything else. Except that was a huge trend, and we're just getting this little pop, little boop. It's not really looking like a trend or anything. It's looking kind of like a residual momentum, which is what I believe actually it is. But that determines future waves. The wave right now is that it wanted to break down and it couldn't, and there ended up being an activation move in that month of December. Boom. There was this huge glitch trade that went from here to here during the day and came straight back down. Didn't actually go there, but there was a print that triggered that. That's what that was. That was the monthly DMI triggering, which changed the dynamic of it, a negative wave where we would have crashed to a positive wave. And from that moment, we were trying to work off. That's why we were getting these very violent moves to the downside. But we couldn't get any up momentum because it was working off the negative momentum. We got a lot of chop, negative DMI on the hourly all here. There was no positive momentum. No positive momentum. It was just sharp spike, sharp spike, sharp spike, and all negative momentum. It was so weird. It was so weird. I've never seen anything like that. And what did you get? You got the positive print of the glitch trade that we gapped down through it. The algos got triggered right here, January 29th. Huge up move, and what did we get? We got a double bounce and a violent sell-off into the top print of that, which would represent a new wave starting. And what did we get? This was not a bearish wave. On my stream, if you were watching, I kept saying that this was not a bearish move. This was an overextended bearish move, and we should be going higher. It was so disgustingly obvious and so toxic that it did something like this. This is a very, very rare type of move in this type of setup, that it never really should have broke this, but it did it in such a way that it got this very violent overextension that got people really scared. A lot of stop limits, a lot of hedging got put on. Also, one of the reasons why, another reason to show you why we're going higher is we had the largest degrossing in equities since the February 2009 here, which was the bottom of the financial crisis. There's massive deleveraging. People wanted to take positions off because they want to go to cash. That is a huge contrarian indicator to the upside. And you could see the algos thereafter churning to the upside right at thereafter. So all in all, so there are a couple of things that we saw there. So the DMI went positive here in December. We churned it out. Algos turned positive here. We got the deleveraging. We're about to make another wave higher. What you would expect to see right here with the DMI on the daily, this is going to cross this week. Whether it crosses first and then we get the rechecking of the negative DMI during the Fed day, that's what you want to look for. It would reject the negative DMI. It would reject the downtrend, and it would continue higher. Or it gets rejected here on Monday, Tuesday-ish, and we go down a little bit lower, and then we get some sort of good news, or the market triggers to the positive with whatever Mr. J. Powell, the money printer himself, says. That's going to cross, and it's going to cross in a very big way. And we're going to have a large continuation wave to the upside in all the indexes. I think this continues for at least a month, probably into May. I'll make another video once it gets closer to where it is, but I just want to update people on what's actually going to happen. Don't sell. I've been telling people on my stream, don't sell, don't sell, don't sell. Buy, everything here. We're going higher, one more major move higher. So we're not going to crash, and the crash, the big one, is postponed at least to 2022 now. Now that this has happened, this may continue for quite some time. I actually cannot believe it. It's unreal. It's the thing that everyone says. Bull markets continue way longer than you would expect, and they do. However, it's inevitable that it happens. It doesn't mean that, oh, now it's not going to happen. It is inevitable. It's just a matter of how the waves are performed and how long it takes based on these waves. And I'll be able to figure it out, more or less. So that's all there is to it, really. So these moves are very important. These videos are very important that I make them, because this could save people a lot of money. Whether people are scared to death over yields or inflation or whatever you're scared about, or you don't know how to position, you can position, you could hedge, you could do whatever you want in that case, but I'm letting you know that the market's going higher. This is what I do. Like, I time major market tops and bottoms. These moves I don't really care for. The major ones that 15, 20, 25% or major corrections, those are the ones that I time. So take it for what it's worth. You can pop into my stream at Grim Barbs at Twitch if you'd like. Or you could just stay long the market. Doesn't matter to me. Just as long as you understand that the market is going higher and you position for it. That's all that I care about. Oh, not financial advice, by the way. Kappa. Oh, and one last thing. The information that I spoke about here, about the DMI and the algorithmic trading and the degrossing here, are not the only things that I've seen and witnessed and based my conclusions on. There's lots of things that I've seen basically every minute of every day for the last months and months, that this is a combination of lots of things together. There's just so many things I could fit into one video. So yeah. All right, good luck out there. Have fun. Peace.